Happy Friday. Good morning, everyone. Welcome to another TradingView update. Prices had been pushing towards the 45.5K mark. A fake out definitely taking place a couple of days ago now as we tried to break through that local top on the 16th of Feb for Bitcoin. Since then, we've been correcting lower. The 0.618 level for the most recent impulsive move higher, which started on the 28th of Feb, coming in, acting as support at 42K, as we anticipated. Level here of support clearly seen, not only from the 0.618 level, but also from the price consolidation between the 12th and the 15th of Feb, that general level where prices had also been trading at the beginning of January. We've got a good chunk of options expiring today. It looks like the feedback that we've been getting from the market is that likely we'll see prices stick around 42K until at least options have expired. If this fails to hold after options have expired, then yeah, expect a retracement down to the 0.5 level at 41K, which is the 0.5 level. You've also got the 50-day moving average coming in, which has historically, when prices have recently corrected, always acted as a support, or at least has always been tested as support, whether it holds or fails to hold. Currently happened, but it's happened. Each occurrence has happened, so will be interesting to see how that develops. Seeing potential short-term upward trending support line coming through as well. So if 42 fails to hold, would likely see a retest of this 41K area, probably at some point tomorrow. So just keep an eye on that. Correlation to TradFi markets is on the up again. So Bitcoin moving in tandem with Dow Jones, Russell 2000, NASDAQ, S&P. We're also seeing on the futures markets, we're seeing the 10-year yield start to encounter or fail to break through the top end of the trading channel that it's been in for, 30 years? Look at this. This is all the way back from, 1993, so almost 30 years. So struggling to break through that at the moment. We've also got a general, or the trend in the S&P 500 and NASDAQ futures is clearly to the downside. You'll be seeing some people call for, there's a bullish divergence on the chart here, but we're looking at the daily and the period between the 27th of January and the 23rd of February is more than 14 days. So this is invalid. So don't listen to anyone who's telling you that there's a bullish divergence forming on the futures market. That is simply not the case. For now, the overall trend continues to be lower. So we'll likely see, or it's probable that we will see continued short-term correction. The real question is just how aggressive that correction will be. On the Ethereum side, Ethereum too struggling to break through this downward trending resistance area for any meaningful period of time. For the third time now, arguably for the fourth. 50-day moving average coming in as well, unable to really offer any strong support at this moment in time. We'll likely see prices stick in and around 2,800 to 2,850, at least for the next few hours, just because when we look at ETH open interest for expiry today, we can see that the most of that pain point is between 2,800 and 2,850. It's at this area where most options expire out of the money, be they puts or calls. Once the options expire, might well see prices, if Bitcoin, for example, continues lower as well, likely see prices test the 0.618 from that current impulsive move higher from the 24th of Feb. 0.618 level coming in at 2,740. Let's see if that holds. This is dubious, but we'll look at it as well. What we've got potential forming here, if prices do improve in the short term, looking at a potential head and shoulders pattern here, where you've got this one shoulder, you've got the bigger head, another shoulder forming here. If that is indeed something that plays out, we'll look at it for now. But then we've got a potential short-term kind of technical target at, I think, let's have a look here. Yeah, it's like roughly around 3,850 something, which would be in line with the local top from the 5th of January. Again, very dubious. I wouldn't pay too much attention to it just yet. We'll likely see again other analysts on the social media talk about this if prices do rally. So just bear in mind. But for now, the overall global risk sentiment is still deteriorating given the ongoing situation. Um, Use support to buy into potential longs, and have patience more than anything at this moment in time. That's it from us. Have a good trading day.